streamed. Hello, thank you very much for joining us once again today. And we are discussing today Foreign Account Tax Compliance Act, FATCA. What is the requirement of FATCA? Why this FATCA has been implemented in the UAE? What is the compliance requirements? Which businesses are subject to FATCA? Which businesses are not subject to FATCA? Because a lot of people are asking this question: are they subject to FATCA? Do they need to submit the notification? Are they subject to reporting? What is the timeline for the notification? All these questions people are asking. So our focus will remain on FATCA today, but out of this, a core thing that we'll be discussing: which businesses are subject to FATCA and which businesses are not subject to FATCA. Whatever we have discussed, these are the all previous webinars that we have discussed till now. Out of these webinars, we have discussed around 38 webinars till today, and these 38 webinars were discussed a lot of things about the corporate tax. We discussed transfer pricing, we discussed free zones, we discussed natural person, juridical person, tax grouping, tax losses, and all these things were discussed earlier. So Foreign Account Tax Compliance Act, FATCA. I just wanted to give you the background of the FATCA. The USA government has decided to implement the tax on the USA residents. The USA government has decided to implement the tax on the USA resident individuals as well as firms as well as companies. So once they have decided to implement the tax on the US residents, so since the people are globally, US people are sitting globally in different jurisdictions, different countries. What the US did, US signed in one inter-government agreement with the different governments. The first they decided to implement the tax on their residents, companies, national person, individuals. Then they have decided, okay, how to implement this decision. They have signed intergovernmental agreement in between the different governments, like there's an agreement in between USA and UK, agreement in between USA and UAE. So once they signed this agreement in between the governments, like the similar agreement has been signed in between the USA government and UAE government. Once this agreement has been signed in between these two governments, the UAE government was supposed to implement that agreement. And this agreement required that the financial institutions, reporting financial institution, then non-financial foreign entities which are active, passive, we'll discuss in detail, they are subject to some sort of reporting. And for the reporting, they've introduced one specific tool how to do the reporting. They have brought common standard reporting. This stands for CSR, common standard reporting. So USA government has decided, USA government has signed agreement with the various governments. They have signed the agreement with the UAE government as well. UAE government has brought some sorts of laws, Fatca laws, CSR laws. Then they have a portal. They have one standard reporting format, CSR. So the companies, the businesses, the individual which are subject to FATCA, they need to do the reporting through the common reporting standard CSR. This is the overview. This is the background. Let's discuss in detail. So first of all, FATCA Compliance Act in 2010 was implemented to avoid tax evasion. The US is the sole major nation that imposes a tax on the income earned worldwide. This income earned worldwide may be income of the individual, or maybe it is the income of the companies as well. There's a citizen, residents. These residents can be companies, residents can be natural person, individual as well. So other countries that are subject to double taxation, Philippines, North Korea, Eritrea, these are the other countries that apply double, basically global. This is not double tax, this is a global taxation on their residents, on the citizens. So when residing overseas and generating income, US citizens are required. What are they required? They need to file an annual tax return. US citizen, it doesn't matter wherever they are living, they need to submit the annual tax return with their Internal Revenue Service. US taxpayers with foreign accounts must disclose these accounts to the US Treasury Department. The legislation that foreign financial institutions disclose detail about the financial accounts held by the US taxpayer, by the foreign entities in which the US taxpayer have a significant ownership stake to avoid 30% withholding tax. Means financial foreign institution, they need to disclose. If they are not disclosing, whatever the payment is being made to those institutions from the US, it will be subject to 30% withholding tax. So this is, they have made some sort of compulsory obligation for the financial institution. They need to do the reporting. If they are not reporting, they will be liable to pay 30% withholding tax. So under the FATCA, a reportable person includes basically US citizens, as we discussed, US residents, entities that are deemed US taxpayer, also considered reportable persons under the FATCA. Moreover, the non-US entities, as I discussed, the substantially owned by the US taxpayers fall within the scope of the reportable persons as well. The above institution are required to report information about the financial accounts held by the US taxpayers, as I discussed basically in the very beginning. USA, UAE, intergovernment agreement, USA bread FATCA laws, CSR laws, under the law, financial institutions, they need to do the reporting. Non-financial foreign entities, if they are passive, they need to do the reporting as well. This is a common standard. FATCA in the UAE, as I discussed, in general, the categories of entities exempt from FATCA requirements are intergovernmental entities. Okay, the UAE signed an intergovernmental agreement. When this agreement was signed by the United States and UAE on 17th of June 2015 for the required information to be exchanged. The type of entity required to report as per the IGA, intergovernmental agreement, and sharing information about the each US reporting account. Since the UAE government has signed, they have brought local laws. Based upon the local laws, the respective financial institution needs to share the information about the financial account held by the US persons or US companies. So this agreement basically based upon this, the local law that has been introduced by the UAE government, this classifies the financial institution. These are primarily applicable on the financial institution. It's also applicable on non-financial foreign entities as well. So for the financial institution, this is reporting financial institution and non-reporting financial institutions. So some institutions will remain financial institution, and some will remain non-reporting financial institutions as well. So what is a financial institution? The term financial institutions means custodian institute, depository institute, investment company, specific insurance company. These are the various categories in the guide. They have given very comprehensive detail about these entities. But for the time being, you can say financial institution means a bank, custodian of the deposits, getting money, advance loan, granting deposit, insurance company. These are the financial institutions. So these financial institutions, it has been classified into two categories. One is a reporting financial institution, and the second is a non-reporting financial institution. Now the guide, the Q&A, whatever it has been provided by the UAE government, they doesn't define specifically financial institution. They said financial institutions which are non-reporting financial institutions. Other than this, every financial institution is a reporting financial institution. So if you are going into a question and answer in the law, in the guide, you will find the definition of non-reporting financial institutions. You will find the definition of financial institutions as well. So financial institution means all financial institutions. Out of this, if you are removing non-reporting financial institution, remaining will be a reporting financial institution. So they're asking, reporting financial institution means any jurisdiction of financial institution that is not a non-reporting financial. Any financial institute which is a non-reporting financial institute, the remaining will be reporting financial institutions. So these are the non-reporting financial institutions. Financial institutions, these are the non-reporting financial institutions. Other than this, every financial institute will be considered as a reporting financial institution. So what are the non-reporting financial institutions? This is government entity. These are the financial institutions like government entity, international government, central bank. Usually it includes basically government entity. The reason is IGA, government has signed the IGA with the USA, and these institutions are falling directly under the government. So it will be presumed these are compliant. So they are not subject to the reporting directly to the IRS or to the respective UE authority to exchange the information, because these are the already information with the government. So these are the non-reporting financial institutions. These financial institutions are not liable to do any reporting. As I mentioned, government entity, the international organization or central bank, like in the same way, board participation, retirement funds, narrow participation funds, other entities, exempt collective investment fund, these all basically are non-reporting financial institutions. Other than this non-reporting financial institutions, all financial institutions are called reporting financial institution. So we have decided FATCA is applicable on the reporting financial institution. What is reporting financial institution? We said all financial institutions other than non-reporting financial institutions are reporting financial institutions. These reporting financial institutions are subject to reporting, are liable to exchange the information. In case they are not doing, 30% tax will be withheld by the US in case they are sourcing any payment from the US. So they need to do the reporting. Now the second category is non-financial foreign entities. So one is the financial institution, second are the non-financial institution. These non-financial institutions are non-financial foreign entities. So all entities out of the USA, are considered non-financial foreign entities other than financial institutions. So non-financial foreign entities can be classified into two categories. One is the active non-financial foreign entities. Second class is the passive non-financial foreign entities. What is the difference in between active and passive non-financial foreign entities? Basically, there are a lot of differences that has been written in the guide, but two are very important. Active non-financial foreign entities, first of all, their income, more than 50% of their income is from the active sources. They are holding more than 50% of their assets to generate the active source of income. So what is active source of income? Any income which is not a passive income, it will be considered active income. So what is the definition of passive income? It has been given in the law. The passive income includes basically dividend, interest, rent, royalties, other type of income that are generally considered to be passive in nature. So if the non-financial foreign entities are active non-financial foreign entities, and when they will be active, when they are generating more than 50% of their income from the active sources, when they are holding more than 50% of their assets to generate the active income. So these are called active NFFE. And second important condition, these are usually entities whose shares are being traded on the respective stock exchanges. The shares are available, public available information. So these are called active NFFE, non-financial foreign entity. So other than active non-financial foreign entities, all other activities which are non-financial, it will be considered passive non-financial foreign entities. And passive non-financial foreign entities means these are the entities having more than 50% of their income from the passive source, and they are holding more than 50% as the assets that are generating passive source of income. So what is the passive income? We have already discussed. So if the entities are generating more than 50% of their income from dividend, interest, royalties, so other type of passive income, so it will be considered passive non-financial foreign entities. If they're generating more than 50% of their income from active sources, holding more than 50% of their assets to generate the active source of income, so these will be considered active non-financial foreign entities. So active non-financial foreign entities, what is the reporting requirement? We have already discussed for the financial institutions, two categories: financial institutions, reporting financial institution, non-reporting financial institution. For reporting, they need to do the reporting. Non-reporting financial institution, they are not subject to reporting. It will be assumed that they are the compliant. Now here in the active, otherwise for the non-reporting financial institution, it will be presumed that the information is already available with the government, it will be shared. Now the active NFFE and passive NFFE. For the active non-financial foreign entities, what has been written in the UE guide, they said may be required to provide the certification of their active status to withholding agents to avoid Fatca withholding on the payment, but they are not required to report or disclose their ownership. It has been written in the guide, which has been issued by the UE government. So active NFFEs are not liable to report or disclose their ownership. Passive NFFEs. What is the reason? The reason is these are the active entities. These are the entities which are already available on the stock exchange. Might be all information is available to the government. So they are not subject to further reporting. They are not required to disclose, report or disclose the ownership. Now the passive MNFC. The passive non-financial foreign entities are earning the passive income. So they said may be required to disclose substantial US owners and controlling interest specified the US person on IRS Form W8 to avoid 30% withholding tax on certain US source payments made. So basically what we can conclude, there are four major categories. These four major categories: financial institutions, two major categories: financial institutions, then non-financial foreign entities. Financial institution can further be classified into reporting financial institution, non-reporting financial institution. In the same way, non-financial foreign entities can be classified active and passive. For the financial institution, reporting financial institutions are liable to reporting, and for the non-financial foreign entities, passive NFFEs are subject to reporting as well. Two categories: non-financial foreign active entities are not subject to reporting. Non-reporting financial institutions are not subject to reporting as well. I believe it will be clear for everyone that which businesses, which entities are subject to FATCA. Now, this is the basically screenshot. This is the diagram I have taken from the Ministry of the UE site. You can see first question they are asking: do you hold a commercial or trade license in the UAE or otherwise a registered business in the UAE? If you are not a registered business in the UAE, then FATCA is not applicable to. If you are a registered business, yes. The next question is: do you meet any of the following definition as per the custom reporting standard CRS? You are a custodial institutions. We have already discussed depository institution, investment entity. We have already discussed. These are the definitions basically of the financial institution. They are asking, first of all, do you have the license in the UAE? Yes or no? Yes. Second question, are you a financial institution? You are saying no. If you are not a financial institution, not required to report under the CRS in the UAE. You are not required to report under the CRS, but you need to provide the information to the local authority here in UAE. Now, first question, you have a trade license. Second question, you are the financial institution. Third question, they are asking, non-reporting financial institution. Are you reporting financial institutions or non-reporting? If you are non-reporting, you are not liable to report. Non-reporting financial institution not required to report under the CRS in the UAE. Now you are asking, no, you are not non-reporting financial institution, means you are a reporting financial institution, then this will be applicable, full-fledged FATCA will be applicable. You meet the definition of reporting financial institutions under CRS and are required to report under the CRS in the UAE, register on the Ministry of Finance portal. So this diagram is regarding the financial institutions. So you have a license, you are a financial institution, you are not a non-reporting financial institution, means you are a reporting financial institution. Once you are reporting financial institution, then you need to do the reporting as under the CRS, Common Reporting Standard. This is one more diagram. They basically explain depository institution, custodial institutions, specific insurance company. We have already discussed these are the different categories of the financial institutions. Now they ask investment entity. These are also part of the financial institution. They have given the definition, basic detail of the non-reporting financial institution. These are the non-reporting financial institutions like government entity, international organization, central bank, board participation fund, narrow participation, retirement fund. These are all different types of the non-reporting financial institutions. We have already discussed this as well. I think everybody will be clear about the scope of the FATCA. Now we will go through, these are the some questions that has been given on the ministry side, Ministry of the UAE side. It will give you more clarity about the applications of FATCA. First, what is CRS, Common Reporting Standard? They said the Common Reporting Standard developed in response to the G20 request approved by the OECD in the CRS agreed reporting global automatic exchange of financial information. Basically, this is a reporting tool where the information will be exchanged automatically. Who is impacted by Common Reporting Standard? This is a UAE reporting financial institution required to identify financial accounts that are held by the account holder, that is a reportable person, or by a passive NFI. This is very important. So they have highlighted two things: reporting financial institutions or by a passive NFI, non-reporting financial institution with one or more controlling interests who are reportable persons and report certain financial account information on annual basis to regulators of the UAE Ministry of Finance. So from this question and answer, you can identify that two persons are subject to reporting. One is the reporting financial institutions, a second are passive NFI, passive non-reporting financials, passive non-financial foreign entities. Who are the regulatory authorities under the CRS? This is basically a different authority. They need to manage the compliance of the CRS, FATCA. CRS, I have already told you, this is a common reporting standard exchange tool, basically a tool to exchange the information. The following authorities appoint a regulatory authority for the purpose of implementing the provisions of the multilateral administrative agreement or automatic exchange of information. Central Bank, Security and Exchange, Commodity, the different authority, Ministry of Finance. These are the authorities which are subject to monitor the compliance of FATCA, ADGM, Abu Dhabi, DAFC, Ministry of Finance. So based the business is in the DFC authority will manage. If the business is in the ADGM authority will manage. If central bank will manage. Otherwise, the mainland entity, non-financial foreign entities, then Ministry of Finance will come in between. What type of entities are financial institutions? We have already discussed. This is a custodial institutions, depository institutions, investment entities, insurance company. These include banks, custodians, investment trades, asset wealth managers, funds, life insurance company, but are not limited to these type of entities. So basically, these are the again, this is the basically types of different types of entities which fall under the definitions of financial institutions. What is the UAE reporting financial institution? We have already discussed in detail. Financial institutions other than non-reporting financial institutions will be considered reporting financial institutions. These are the financial institutions. They said any reporting financial institution means any financial institutions other than non-reporting financial institution. These all are the non-reporting financial institutions. Other than these non-reporting financial institutions or financial institutions will fall under the definition of reporting financial institutions. Can a third-party service provider fulfill the CRS due diligence? So this is basically what they need to do. They, a financial institution, they need to do the due diligence of the financial account, then they need to report. Now they are asking, can the financial institution, reporting financial institutions, can they outsource the due diligence? Law says yes, they can outsource it, but they need to supervise it. Do active non-financial entities. We have discussed two types of non-financial foreign entities. It can be active non-financial foreign entities or passive non-financial foreign entities. Now they are asking, do active non-financial entities, passive non-financial have reporting obligation under the CRS? Under the CRS, UAE financial institutions include, these all are the financial institutions. Entities which are not UAE are considered NFE for the purpose of CRS. Yes, this could be an active or passive. And we have already decided passive needs reporting. Active entities are not subject to reporting. What is non-financial entity? Any entity basically which is not a financial entity, it will be considered non-financial entity. It can be classified into passive and passive and active non-financial foreign entities. What are the obligation of reporting UAE financial under the CRS? What is their obligation? What the reporting financial institutions do? I have already highlighted a lot of things are given here, what they need to do. Basically, securitization, due diligence, and they need to do the reporting. The important thing is they need to do the due diligence of all financial accounts on annual basis. Once they are doing due diligence, they need to report it as well. Once they're reporting, they will be using a tool CRS. So their due diligence, they can outsource it to third parties as well, as we discussed. Are UAE RFIs required to submit nil return? They are asking, do they need to submit the nil return for the financial accounts held by the US citizens? They said, if a reporting UAE financials has carried out due diligence on an account holder and identified that it doesn't maintain any reportable account, the UAE reporting financial institution is required to submit a nil return. It means even the US citizen has a account with the bank, this account holder, then they no activity, no, they need to submit the nil return. At least they need to report it to the CRS and they need to report to the Ministry of Finance as well. So how is information exchange under the CRS? I have already told you information will be exchanged automatically through the portal through this tool. So reporting financial institution must report the detail of the reportable accounts by stipulated deadline. What the deadline? 30th June from the end of the respective financial year. So if you are here, this is basically by the end of every on or before 30th June, they need to report it. For this year, for 2023, they need to report it by 30th June 2024. What is the reporting due date for CRS in the UAE? The first reporting due date for the CRS in the UAE was 30th June 2018, covering the first reporting period up to 31st December 2017. So reporting period what was ended 31st December 2017. They were supposed to do the Fatca reporting by 30th June 2018. Subsequently, by 30th June of the year following each reporting period. The CRS reporting deadline for the URE reporting financial institution is to report 30th June of the following each reporting financial period, unless the reporting deadline has been extended by the respective regulators. So if the extension has been given, well and good. Otherwise, they need to do within 6 months from the end of the relevant reporting period. 6 months are by the 30th June of the end of the relevant reporting period. A reporting period is ending by 31st December 2000 of any respective year. So this is the summary of the discussion basically. This is very straightforward. If you don't have any time, just look into this diagram. It will be quite helpful for you. So Fatca in the UAE, first of all entities in the UAE should comply with the US UAE IGA, Intergovernmental Agreement. We have already discussed there's the agreement in between the USA and UAE. Every business in the UAE is subject to comply this US UAE Intergovernmental Agreement. As per agreement, there can be two parties. It can be reporting financial institution or non-reporting foreign entities. These reporting financial institutions, it can be classified into reporting financial institutions and non-reporting financial institutions. If these are the reporting financial institutions, these are the banks, mutual funds, insurance companies. These are obligated to identify and exchange information through the CRS. If these are the non-reporting financial institutions like government, central bank, local banks deemed compliant, and these are exempt from reporting. Now, non-financial foreign entities, it can be active non-financial foreign entities or it can be passive non-financial foreign entities. Active include my public company. These shares are already trading on the market. They have active source of income more than 50%. They have the asset, more than 50% of the assets are being used to generate more than 50% active income. So they are not required to report and disclose their ownership because they are not subject to disclose the ownership we have already discussed. Now, is the passive NFE non-active? All the basically non-financial foreign entities which are not active, it will be considered passive non-financial foreign entities. Need to report substantial US ownership and control. They need to do the reporting. So they need this circle need to do the reporting, and this area need to do the reporting as well. These two areas are not subject to reporting. This is over from my side. Thank you very much for being with me. You can contact us. If you have any question, you can contact me or any of my team member. We are always ready to listen, understand, and deliver. You can approach us at 0097143391488, or you can drop an email at info@crestcooper.com. Thank you very much for being with me. If you have any question, you are most welcome. When is the deadline to register for corporate tax? As getting different answers. You are asking for the corporate tax. There's no timeline to register the corporate tax. Law is asking basically you can get yourself registered at any time before the submission of your first tax return. Your first tax return will be due in 2025. You have an option to hold your registration and get yourself registered in 2025. But we don't recommend it. We strongly recommend you need to go and get yourself registered. Even this has been encouraged by the Federal Tax Authority as well. Any further question, guys? UAE-based manufacturing entities are not obligated to register for with MOF for Fatca, CRS. UAE-based manufacturing entities. But if in the UAE-based manufacturing entities, if the control and ownership with the US citizen, it will fall under the non-financial foreign entities. Then you need to look into the reporting with active or passive. Active, this is not required, but you need to share some information, but you are not liable to share exchange information of the ownership as I mentioned, and owner, but if you are passive, then you need to share. Okay, guys, thank you very much. Thank you and have a lovely evening. Thank you for being with us today. Take care. Thank you. Bye-bye.